Hi guys. Hopefully sharp. Today is your lucky day. This is gonna be the third video for today. So far I did analysis on Nasdaq. I did US 30. Now I'm doing VIX 75. It's gonna be a third video for today. So basically, I'm just showing you. I'm doing top-down analysis to show you, the things that you can look out for, or the areas where you can look to, look like to sort of search for trades, right? So if you are new here, make sure that you subscribe and then you hit the bell icon so that maybe every Sunday around this time you can come check this site. You will find there will be a new video where I'm giving the forecast on what to expect from all this, whatever that I'll be sharing on that day. Okay, so if you've been following, especially this one, you will remember that, as usual, we always start at the top. So make sure that you stick throughout so that you'll have an idea as to like how to approach the chart. Let's get started. So always we start with the highest time frame, which is our monthly, and nothing much has sort of changed here since we had our search, like the analysis that we made last on VIX 75. Remember on this monthly, it moved like this and it moved like that, which means this was the high. Now we had a higher high, right? So if we have a higher high, it means the monthly gave us a trend line here. It gave us a trend line there. That's a monthly trend line, and this being the swing low, it became monthly area of support. So that's the area where I said, if you had watched the previous video, I did mention that that's an area where you can expect a price to sort of react from there, right? Anywhere inside there, if it gives you a reason to go long, just go and take a trade and hope that it will continue pushing like that. So that's all that you had on monthly, and then that's how you should always approach a chart. Start at the top just to see what the bigger guys are saying, then you just go down. When you see you're moving down to the smaller time frames, just check if whatever that you're finding down there is agreeing with the bigger guys. That's basically how you analyze. So here, even a couple of weeks back when we were doing the analysis, remember this was our interested area to take trades to the downside. Why? Because when we were going up, we had this same thing that we had on monthly, which is a higher high, meaning we could draw a trend line. We could draw this trend line. When you have the trend line, the price went up, it came back. There was a, if you check the price action here, you can see it was not just the bears pushing down. The bulls were trying to come in. As you can see the tails there, you can see it was not fully in the bears' hands. The bulls were also trying to come in, which means there was sort of an imbalance. Something's happening there. So that's why we can say that after forming all of that, the bears won the battle, and then they just shot straight down and violated the bulls' trend line. Which is why I'm saying this area is important, because of what? It initiated this move that broke the trend line. This move that broke the trend line. So should the price go back there, I said you can look for trades. If you've been long enough on this channel, you will remember those days when we were analyzing from that level. And then from there, we said, remember the monthly trend line was here, and the monthly area was somewhere around there. Now let's check what is happening on weekly. On weekly, our bullish trend line was up there because the price action looks different what we had on monthly, but it doesn't change the fact that at some point this was a swing low. We did this, which means at some point we had this as our trend line, right? I hope you still follow. If that is what we had as our trend line at some point, it means the move from this weekly support, the move from here, it went up. Let's use a different color so that you can follow. The move went up like that and violated that all the trend line that we had when we did this previously. So it means this area of support on weekly is also important, and we know that this area of support is also inside that monthly support we saw on monthly, and it's also just around the monthly bullish trend line, which means anywhere around here you were allowed to look for trades to go up. And you can see the price touched it and then it went up. So remember, there was a time where I had the trade, and then it's just that the price, they made a deeper retracement when it played around here, because remember the trade that I got was exactly here, and then I had my TPs, and then I said this was the old something, but you'll see it nicely on daily. And then it came back. When it did this, that's when it took me out, and then I never had the strength to go in again. So sometimes you can have a nice level, and then you're hoping that the price will just come back, and maybe after entering you just take off. But sometimes it can play around, you put the preview in, then it takes you out before taking off. It's just one of those days. It happens, but it's part of the game. Let's move on. So now another thing that you need to note on weekly is that we had the bearish trend line, and around here we are testing the trend line, and we have the area of resistance there. It means even if you had gotten the trade from there, then you need to exit around there, and maybe leave one trade at break even, but make sure that the lot size is like the minimum, that even if it was to come back and take you out with all those pips, you're not gonna cry. You see? So now let's see. So that's all that you are having on weekly. You can let's put the trend line, so that when you're going down to maybe daily, you'll be able to see all this. So this is the bearish trend line. You can see the price is playing around it there. All right, and then this was the the monthly trend line, and the weekly. The price did test this one. I still remember very well. If you don't believe me, let me just put the actual rectangle and show you. This one here. Still remember it because I was in this trade. You can see the price did touch it there. Because remember, we are using this point and the lowest point. The price did touch it there, which is where I got the trade. And now the price is playing around the weekly bearish trend line. But you need to keep in mind that this is a weekly, and yes, the price doesn't always move in a straight line, which means if you get the reasons to go short, you can take your shots, but don't expect them to be long-term trades. Why? Because the price is coming from a very strong what do you call that, a very strong monthly support, if you still remember. So this can just be maybe a pullback in before taking off, or even a smaller one before taking off. So if you happen to look for trades to go short there, make sure that you don't expect them to be long term, like something like this. It can happen, but don't expect that. You need to be realistic in your expectations or in your analysis. Otherwise, you're going to be disappointed many times. So let's go down to daily. And then on daily, so if you put this weekly trend line nicely, you can see that the price did touch it, and then it gave us the pin bar on daily, and then now it's dropping. So if you had your buy limit, buy trades, it doesn't help you in you putting your TP there, whereas you know that you can see that you can't put your TP there, whereas you can see this is the weekly trend line and the price is hitting it. So you're trying to just say, God help me, this thing need to break it and go up there. You can do that, but be realistic. Set it at the nearest opposing structure and stay out of trouble. Take your profits and then walk away. You see? So yeah, this is where I'd gotten my trade, if you still remember. So this was the old area of support here, and then this side it was broken, and then it came back, and then it tested it. I didn't expect it to sort of pull back like this and go all the way down, because this is the one that hit my break even on the remaining trade, because some of the trades I exited here because of what? This is an obstacle. So at the next obstacle, exit. And then you can see that it came back. It went all the way down, and then I was like, let me just leave it. Oh, I come back 2 days later, it went all the way up. I was like, and these people, what's happening now? But it's just part of the game, guys. You just move on. So here we can see that when it was coming down, what is it that we can take from this one? This is how I had entered my trade. This is how I entered. I would use H4 and entered it like this. I said when it was coming down, you remember, some of you will remember this setup. It was going down like that, and then at this point you could have used the pin bar to enter, but now that's not where I entered. I said from here the price went up, and then it broke the area of resistance and also area of also the trend line, which means this is a nice support where on H4 that should the price come back to it, I'm more than welcome to go and execute. And that's why I executed when it hit it here. Here it missed it a bit, but I was like, let me not move my thing. I think here I used H1, we'll see, but it was inside that H4. The ultimate idea was to trade the H4 level, but here you can see it as a pin bar. It doesn't look nice, so I was like, let me try and go down to maybe H1 to see if I can't find a nice zone inside that zone. And that's why I found it, and the entry was here, and then it took off, and then I was like, and then remember there's another one here, and then that's the one that pushed us to this guy. From that guy, the price never looked back. So that's where I put my TPs. Remember, you're buying, you're placing it at the nearest one. Remember, the entry was here, another one there. Even if you watch the 2 previous videos I made on VIX 75, you will see these guys. And then from there, I didn't expect it to come all the way up, down, and then hit my break even, which was somewhere around there. It came all the way down, hit my break even. From there, it never looked back. And I didn't even have the strength to try and trade it again. I just was like, no, you know what? I'll just analyze it again sometime later. But yeah, that's how I had taken it. So when I went down to H1, so here I'm gonna show. I just want to show you how I had taken that one, which is how you should always, if you are trying to drill down your trades. Remember the trend line on H4 was somewhere there, and then I was like, you know what? I can use this zone, this, which is inside that pin bar. And then here it got missed. I was like, I'm not removing my limit order. Came back, triggered me, took off. That's how you trade. So now let's go back and analyze the current structure on H4. Remember on H4, let's put it, make sure that it's up to the point. Like here, if you check, I want it to be exactly at the highest point, right? So here is how you're trading. As much as you can say this is bullish, 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 and then it started feeling the heat, and then it exploded to the upside, right? And then you can say this is my nice area of support here. So now if the price is coming back to it, I'm going to buy. You are making a mistake, simply because I think we even had the same thing here when the price was coming down. When was it? But it's fine. I'll just explain using the current structure. You are making a biggest mistake to try and buy the pullback into this nice looking support. Why? Number one, which is the main reason, the price is feeling the hit from a weekly, keep in mind, weekly bearish trend line. So I can't try and say the price has to react to this one and go fight the weekly again. No, weekly is very strong. So now what you can do here, remember what you saw on daily. There's a rejection candlestick there on daily. If you still remember, there's a rejection candlestick. So now you are saying, if I get a reason to go short, at least I know I'll be trading around, I'll be selling around the bearish, the weekly bearish trend line. And also on daily, I have a bearish rejection candlestick. So now you're on H4, right? On H4, the price went up and then sort of pulled back and then went up again, which means your H4 bullish trend line was here. H4 bullish trend line was here, and now you can all see that the bullish trend line broken, support area broken, which is this one that I said you couldn't take. Why? Because the price is coming from a highest time frame structure, the structure that is higher than the one that you're trying to buy from. This is H4 and it's coming from weekly, so you couldn't take that one. And now both of them are violated, meaning H4 is bearish, which now means it agrees with what? It is in line with the weekly bearish trend line and also the daily rejection candlesticks. So which means if right now you were to mark this, this is just that I can't mark it properly because of what. If you were to mark this here and say this is my H4 resistance that caused this move, that formed this move and broke this trend line, and also broke the support that we're talking about. So meaning, since the H4 is bearish, this is the nearest reasonable area for me to take a shot. You can take your chances there. It makes sense for you to sell from that. If it fails, it fails, but the rules, they allow you to take a sell from there, which is the same thing that I applied here. Where was it? I applied here. It's just that now it's in reverse. The price was coming down. Here the price is going up. The price had a trend line here. The price has a trend line there. The price broke. It's the same thing. Yes, look at it this way. You couldn't take a buy from this. A sell from this resistance. Why? Because the price is coming from a weekly area of support. So even if the price is still underneath the trend line, when it is hitting your H4 resistance, you can't take that because it's coming from the highest time frame structure. You see? So these are the stuff that I'm teaching in the mentorship program. So if you're interested, you will just come and join so that we can have more one-on-one sessions where I can teach you more about this stuff. But guys, if the price is coming from a highest time frame structure, try and not fight that. So you can see I couldn't take that, you couldn't take this. It's the same. The price went up and violated the trend line and the resistance. The price came down and violated the trend line and the support. The price came back and then it tested the demand that did that, or the support that did that. Should the price go up and test the resistance that did that, you are more than welcome to sell and hope that what happened here can happen there. If it fails, it fails, but now currently the structure allows you to sell from anywhere from here to somewhere up there. It allows you to do that. So that's what you can expect from this one. I hope you learned something from this one, because that's how you trade VIX. If you trade volatility 75 like that, you'll always be able to catch, look how healthy this move is. You'll be able to catch stuff like that, because if the price is still moving up, sometimes you can say, I'm putting my stop loss there, and then this is an area of resistance, and it broke this trend line when you're going down. So you can make sure that most of your trades, you're going to exit them here. But you can always leave that one where you're like, now this is just there. Should the price break the structures, you will find me with a trade running. The same thing I did here when I took my trades, and then I can exit some here and then some here at the old support. Then I know that should it continue going up, I still have a trade. I didn't exit all of them. But if your account is still very small, just have one trade, exit at the next opposing structure. Be happy with the profit that you made. As long as it's profit, it's something. You are moving, your account is growing, you are moving forward. So here we are just waiting somewhere there and hope the price will go down. Because if it goes up, it means now it might end up challenging the weekly trend line. And then when the weekly trend line is broken, it means there is nothing pushing to the downside. We can continue searching for trades to go up, and it means that it will have new higher than that, meaning this guy has to be part of the trend line. When we have a new high, then that's when you'll come and put your trend line like this, because you'll be having something like this where you broke the high that we had there, something like that. Then you continue searching for trades around the trend line, continue trading like that. That is how you trade. You don't force trades. Allow the price to show you what it wants to do, and then from there you make decisions that best fit what the price is trying to do, so that you join what it is trying to do. You don't tell it what to do, because it will disappoint you many times. So always you have the area below and the area above. So here we had the area below, and then maybe the area above you try to mark it using the old structure, because remember this was not there at the time. But now we can say, because this is broken, you always move down and look for the next one to be the area below. We had a market pause there, which is where the price turned, and then this is your new area above. So on H4, this is your support, nearest support, this is your nearest resistance. You see, so when the price is moving up, should it give you a chance to go short, and you decide to take it, maybe if it goes up like that and you decide to take it, you can't ignore this. I mean, look at it. It's a nice area of support that gave us a long move to go up, and then now price came again, is being rejected again. What if it comes in, it's rejected again? We're not saying it's going to be broken or it's going to hold, but you don't know. That's why you need to put this as your TP1. Should it be broken, you can target the next one, because remember, this is the one that did what? It gave us this move and broke that guy, and that guy was important. Why? Because he is the one that broke the trend line. So you see, this guy is not just here for nothing. He did something when he was formed. He moved up and broke the previous structure. That was also important because it broke the previous trend line. That's how you link all these guys together. So all you have to do is just to make sure that you target the next opposing structure. Stay out of trouble. So for this one, look for trades to go short here. If you don't get any reason to go short, or like a reversal pattern or pin bars in the opposite direction that buries pin bars or anything like that, you don't have a trade. But if you get them, take your chances. Make sure you have a stop loss in place, because nothing is guaranteed. All right, I'm gonna end it like that. I think 3 videos are enough, guys. I'll see you again sometime during the week, and good luck with your trading week. And then for the guys that are in the mentorship program, we will continue that side. And then for the new guys that are, if you're interested, you will just let me know, so that when these guys have sort of graduated and then they're out, they will still have, be in contact with me should they need clarity on anything. But I'll take the new guys so that we're going through the whole process that they went through. And then yeah, that's how I'm gonna do it, guys. So just so that if you're interested in learning how I do stuff like this, so that you don't rely on things like signal providers. No, guys, that's not how you should live. Because if they give you a signal and then you make money from that, it means the day something happens to them and then they are no longer giving signals, your trading is doomed. But if you pay for something, be like, no, I'm paying this person maybe to teach me how they do it this way, because I've seen them analyze. I like how they analyze, not because they showed me something. Maybe they showed you a car, but you don't know how they bought that car or if it really belongs to them. You see, so make sure that whenever you're thinking of involving money to give to somebody else, but never give someone to manage your account or to give you to pay for signals. No, make sure to say that maybe this guy, the way he's analyzing, I've seen him analyze the markets, and then I like how he's analyzing. I want to analyze like him. That's why I'm paying him, so that he can teach me how to analyze like that, so that you'll be independent. You'll be able to come up with the signals yourself. You should be an independent. You just pay that person, they teach you how to do it, you get it, you'll continue applying it, modify it maybe if you feel like maybe there are things that you're going to discover yourself, and then continue like that. Then you're going to grow. All right, I'm gonna end it there, guys, and then I'll see you in the next video. Sharp, sharp.